morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Thursday, and it's October 15th. Hope you guys are having a great day. We do got, as you can see here, a few economic data as I highlighted the important ones for us. So we'll start off with the import prices on a month-over-month basis, and it's not the high level. It's actually pretty low level in terms of weight and of impact on the markets. But the previous one came out in August at a 0.9% increase. However, in forecast gone for 0.3%, came in at forecast at 0.3% in September. Now, here's a biggie. This is the Philly Fed Index. This is manufacturing in the Philadelphia region for the month of October. We had 15, which is a good number back in September. Forecast was calling for a slight dip to 14, and it actually dropped all the way up to 32.3. So this had a huge spike, which is actually people are looking at. This is obviously a pretty big number there. Now we also got manufacturing in New York region with the New York Fed manufacturing, or New York Fed, and previous month in September we had 17, forecast accounted for 15, and it dropped a little bit more than we expected at 10.5. But still good overall numbers here. Manufacturing is showing some improvement, which is obviously a good sign for trying to get this economy out of this recession that the pandemic had created. Now, last but not least, this is what we get every Thursday, is the jobless claims, and this is also a number that we've been closely watching. And last week's data that came out, or last week's report came in at 840,000 people applying for unemployment. Forecast is calling for a dip to 825. Instead of dipping, it actually increased quite a bit to 898,000. So we had 898,000 people apply for unemployment, which is obviously not a good sign that more people are going on to unemployment here. Let's jump ahead here to the headline news. Stocks are down a bit. We've been kind of seeing this. The stocks have been starting off strong, and then they kind of come down negative territory. Yesterday was no exception. It was when we did this report yesterday, it was in positive territory, and then went into negative later in the day. The day before, they were in positive, and then two of the indexes went into negative territory. However, today we pretty much started off in negative territory with all three indexes in negative territories. Now they are reviewing Q3 corporate earnings still. One of the things that's on the sentiment that's for investors is they're seeing the rising numbers of corona cases. They're creating more restrictions in Europe, which could potentially come over this way as well, and that is a concern that we could have another disruption to the economy. Also, they're still disappointed that there has not yet been a agreement yet for a stimulus package before the elections here, and I think they're kind of looking at maybe nothing happening until after the election. Last but not least, we have a few more Fed speakers out speaking today. This seems to be a pretty busy week for them, and they are out giving a lot of speeches today. Let's jump ahead, see how this is impacting the mortgage rates today. Mortgage rates, we had a nice improvement yesterday. As you saw, we broke above the 50-day and pretty much came in at the 25-day moving average. Right now we are just above it. We had this kind of uncertainty in the market where you can see this kind of starry effect here, testing the double, which has now become a floor, testing that level here as well as going up. Now, some lenders may have had, if they came out with the pricing way up here, could be poised to worsen the pricing, but right now I would say we're about the same as where we closed yesterday. We did see some improvement in our pricing yesterday because we did improve up to basically close up 13 basis points, which led a lot of lenders to reprice for the better, and those who did not reprice for the better probably came out with that better pricing today as a result. So you should see a little better pricing as of right now compared to yesterday morning. So let's see what yields are doing as well. Yields we're testing, it's as you can see 25-day moving average and the next technical level. However, it did pull back a bit. It's up. It's currently about just below 0.72 right now, at 0.7157 right now. So it's still showing this direction now. It's going a downward trend. It had, like I said, it had a pretty big drop down below 70, and unfortunately pulled back a little bit as a result. And that's kind of what led to some possibilities of the lenders of repricing for worse today if they came out with a little better pricing. If you guys are looking to refinance or purchase, hang in. I'll leave a link at the end of this video. Include also that link in the description. If you guys are needing information about loan programs and different various information, about mortgages. The site will give you some of that information that it does not include. If you guys are looking for, please feel free to reach out. My contact information will be there. I am a loan officer with a national company. We can certainly help you guys in many different areas. We can get you guys pre-approved and help you finance your next property. We can help you with the refinances, whether it's a rate and term, want to take money out of the property, or simply have different ideas of trying to do some debt consolidation uh, or different projects you want to kind of look at. We can certainly talk to you a little bit about and run some numbers and see what works best for you guys. Please feel free to stand by. But meanwhile, again, rates remain a little bit better today than what we saw yesterday. And you guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.